For many investors, their most expensive mistake isn't picking the wrong stock. It is not keeping enough cash. But what about inflation? That's an important question. However, the cost of inflation is nothing compared to the cost of this one mistake. Imagine this. You have a serious emergency, and your only way out is to sell a considerable part of your investments. This is a tough decision as it is. Unfortunately, it gets worse. It's September 2022. The stock market is in free fall, and your portfolio is down 24%. What makes this particularly painful is that you know you should be taking advantage of the current buying opportunity, but you don't have the cash to deploy. On top of that, you are being forced to sell at a loss. This means that if you need $10,000 to cover your emergency, you have to sell about $13,000 worth of stocks. That $3,000 loss is perhaps years of compounding wiped out in a moment. Not even inflation would decimate your cash like that. The best investors don't see cash as dead money. They understand that keeping a decent amount of it is a crucial part of their investment strategy. Cash helps you cover emergencies without forcing you into debt. It protects your portfolio from panic selling at the worst possible time. And when the market crashes and everyone else is scrambling for the exit, it lets you walk calmly in the opposite direction, ready to shop. Moreover, there is a certain confidence and peace of mind that comes with knowing that you have enough cash to weather the storm when life happens. So, the question is not whether you can afford to keep cash. The real question is whether you can afford not to.